Hey, Buffett Trades. I wanted to do a video analysis update of the stock market. We'll talk about Apple, Nvidia, Qualcomm, Taiwan Semiconductors, Micron, the S&P 500, IWM, Airline ETF Jets, Boeing, Carnival Cruise Lines XLV, Pfizer, AT&T, Tesla and NIO, Li Auto, Solar ETF TAN, ROKU, Palantir, Square Cash, ARKW, Amazon, Fiverr, Alibaba, OKTA, MicroStrategy, and Riot Blockchain. So Apple forms a wave 1 and a wave 2. It's within a large wave 3 right now that will take it to the 161.8% extension of wave 1, which is 171. This large wave 3 is subdivided into wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, wave 4 of wave 3. I believe wave 5 of wave 3 will be the length of wave 3, placed at the wave 4 low. In the coming weeks, certainly the coming months, Apple hits 171. It will hold above 138, and that will complete a large wave 3. We'll have a shallow wave 4 correction and go on a wave 5 higher. Wave 5 likely will be the length of wave 1, placed at the wave 4 low. That could take Apple to 201, and depending on how fast this Q4 correction ends, we could see 201 in Q1. If it's a really kind of sideways wave 4, I think maybe it would be 201 in Q2. But really, regardless, I think Apple holds above 138 and goes to 171, 173 in the short term, has a shallow wave 4 correction, and heads to 200 almost certainly in the first half of 2022, in my opinion, especially if it holds above 138. Here's Nvidia. Nvidia, if you go to the price overview, you can see its implied volatility percentile is at 99%. That means that options on Nvidia are extremely expensive. And in the stock market, you don't really get paid to predict things that are already being anticipated. So the options market is already anticipating Nvidia is going to have a big move, and that's already priced into the option premium. So whether or not to hold shares and hold options are two completely different questions. If we look at Nvidia right now, we had this as a wave 1 and a wave 2, a wave 3 and a wave 4. And the Nvidia was going to be in a wave 5 that would conservatively take Nvidia to 303 by the end of the summer of 2022. And it's November 5th. So that was way too conservative. What I think is probably going on is that this is a wave 3 that ended. But regardless, especially when you look at the implied volatility, I'm really looking for Nvidia to go sideways and digest these gains. I think there's going to be a lot of alpha in the laggard semiconductor stocks. We saw Qualcomm and Applied Materials, really explode this week and break to new highs. I think that's going to be, kind of the semiconductor sector to look at, and that, Nvidia, all the retail traders will chase it, but it's just going to go sideways, wear you out once again before the next leg up. So if we look at the RSI, that's kind of where we get a lot of evidence that this is not a wave 5 in progress. I think this is a wave 1 and a wave 2. This is a wave 3. We'll go sideways into wave 4, take a wave 5 higher, later into 2022. Honestly, if Nvidia just runs off, it runs off, right? And so Nvidia is one of those stocks that's really famous for people regretting selling it. There's a whole history, probably a whole Reddit thread of people who have sold Nvidia in 2015, 2016 and regretted it. So statistically, it looks like that's going to be the same case, but I do want to see sideways action, some consolidation. It's really hard to believe that, with options being this expensive, Nvidia just keeps flying to the upside. I'm looking for TSM, I'm looking for Qualcomm and Micron and Intel to really take over the mantle in the semiconductor sector, but still, I think it's wave 1 and wave 2. This is probably another wave 1 and another wave 2. We ended wave 3. We'll go sideways into wave 4, take wave 5 higher into 2022 later down the road. Here's Qualcomm. This is my favorite chart. This is the best chart we got this week. Man, so we came into, Q4 with a couple of sectors we were looking for rotation. One of them was clean energy. We got a lot of evidence of that. Another one was laggard semiconductors. And I think with Applied Materials and Qualcomm, which we really focused on getting above these highs, we got a lot of confirmation that, that's correct. This is wave 1, ABC wave 2. This is wave 3, ABC wave 4, ended at the 38.2% retracement. I believe wave 5 will be the length of wave 3, placed at the wave 4 low. Aggressively, Qualcomm hits 232 in Q1. More conservatively, it's going to hit it in Q2. I really think Qualcomm, Micron, Taiwan Semiconductors, and Intel are going to move together. So they look really good. I think Qualcomm holds this low, and it's going to, go on a pretty explosive rally to the upside. So I'm going to bring this up now. I brought it up. If you look at my Qualcomm post most recently, I pointed this out. This was a huge cloud bounce on the weekly Ichimoku cloud. So this is one thing that I look for, to kind of complement wave theory, is this is a big cloud bounce on the weekly chart for Qualcomm. So a successful cloud bounce on the weekly chart, especially a big old cloud like this, could lead to a massive kind of sustained rally to the upside. Tesla was the exact same thing. And the whole point is that I think Roku is kind of doing this right now. We'll get to Roku later, but I just wanted to point that out, that a cloud bounce off the weekly chart, if it's successful, can be a really objective way that a sustained uptrend is going to last. Here is Taiwan Semiconductors. This is basically the same chart we just looked at, right? I mean, it's the same thing. Wave 1, wave 2, wave 3, wave 4. Hey, go chase Nvidia. Wow, Taiwan Semiconductors and Qualcomm are just now starting to move. So if we look right now, Qualcomm just broke above this high. And I think that Taiwan Semiconductors is next. This is wave 1 and wave 2, huge wave 3. Wave 4 is ending, or has already ended, between the 23.6 and the 38.2% retracement. I think that Taiwan Semis holds above 104, goes on a wave 5, that it's going to be at least the length of wave 3, places the wave 4 low. While Qualcomm goes to 232, Taiwan Semis will go to 208. And just like Qualcomm, aggressively, very aggressively, that happens in Q1. More conservatively, that happens in Q2. But from contraction comes expansion. I know Qualcomm and Taiwan Semiconductors and Micron haven't moved much, but fluctuations in implied volatility are just important to notice as fluctuations in price. And right now, I think we're going to go from not moving to moving a lot. And I think that from contraction comes expansion. Expansion will be to the upside, just like Qualcomm, just like Micron, in my opinion, is going to be. So Micron looks really damn good. And honestly, it almost feels silly to call this a wave 3 and a wave 4 because that's too conservative. This could definitely be another wave 1 and another wave 2. But the full count, the most conservative count, this is a wave 1, an ABC wave 2. This is a big old wave 3, and an ABC correction that ended wave 4 at the 50% retracement. The length of wave 3 places the wave 4 low with Taiwan Semis, with Qualcomm. We'll take Micron to 121 aggressively in Q1, more conservatively in Q2. I think 63 doesn't get broken. I think Micron really starts to, catch the market off guard. I mean, it'd be really... if we started seeing some higher than average volume days where Micron started to go chew through the supply, as they say, and break this wave 3 high, we know that this is a huge base. And I think Qualcomm has kind of already confirmed that this is a huge base. So that's just how I see it. If we're above 63, Micron to 121. Here is the S&P 500. It formed a 1, 2, 3, 4, 5 huge wave 1, and an ABC correction ended a huge wave 2. The length of wave 1 placed the wave 2 low, successfully predicted that the conservative wave 3 target would be 460. I think that was conservative. I think this is wave 1 of wave 3, wave 2 of wave 3. This is wave 3 of wave 3, wave 4 of wave 3 ended, and we broke to a new high. Now, it's going to be tempting for a lot of people to call for a super crash. I think when we look at the Russell 2000 in a second, we're going to see that we're going to enter a stock pickers market. And we've kind of seen a lot of evidence of that already. When we look at the ARK ETFs in a little bit, we'll get more evidence of that. But what we really could see is that this is going to be a stock pickers market. I think that the laggers, semiconductors, are ones that we've correctly picked. I think that some of the reopening stocks, some of the healthcare stocks, many of Cathie Wood's ARK ETFs, and especially the clean energy stocks are going to be kind of in that list. But this is a big wave 3 in progress. I think this is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. So the length of wave 1 places the wave 4 low should take SPY to 500. And it's looking like my prediction that would happen in Q1, by the end of Q1 is going to be conservative. And it might even be conservative that we hit 500. But still, 1, 2, 3, 4, 5 waves would end at wave 3. We'd have a shallow wave 4 correction. You're looking for a wave 5 higher. It wouldn't feel shallow, but that is what I would be expecting, that we're ending a large degree wave 3. We go into a wave 4, have a wave 5 higher to the upside. So it looks good, but I think right now, more importantly, we should look at the Russell 2000. This is probably telling a more important story because none of the stocks that are in the Russell are in the S&P 500, nor are they in the NASDAQ. So that's actually a really, good thing for, a lot of growth investors, a lot of, materials and value investors, that we could see, some stocks that we haven't really thought about for the past couple of quarters really come to life. The Russell 2000, in my opinion, confirmed it's within wave 5. Wave 5 will be at least the length of wave 1, placed at the wave 4 low. That would give a very conservative Russell 2000 target of 266. Now, I don't think it's actually going to stop at 266. I can't prove it yet, but if we go past 266, let's say we hit 270, then that means that most likely wave 5 will be the length of wave 3, placed at the wave 4 low. That could take the Russell 2000, I think, almost conservatively to about 309, 308 in the first half of 2022. I don't think we're going to go below 208. So this is looking good. This is a really kind of tight base, a really nice consolidation pattern. And I think that, the big boys, they've got some big plans for it. If we go past 266, I think 308, 309 is on deck in the first half of the year, possibly the first quarter. Airline ETF Jets we talk about sector rotation. We talk about, a lot of things. I think that one thing we could see is that this is a very conservative view, what I'm about to present. But it's, really the only one I can prove. I think that Jets formed a wave 1 and a wave 2. This is a big old wave 3 that passed the 161.8% extension. We ended wave 4 at the 50% retracement that retested the wave 1 high. We're in a wave 5 higher right now that will conservatively be either the length of wave 1 or the length of wave 3 placed at the wave 4 low. That gives a target zone of 31 to 34. Now, what if the airline ETF Jets goes to 36 or 37? What if it goes past 34? Most likely, that's going to mean the airline ETF Jets isn't within wave 5. It's within wave 3 of wave 3. 34 is the minimum wave 3 target. We have a shallow wave 4 correction and go on a wave 5 higher. It seems aggressive, but when we look at Boeing and Carnival Cruise Lines, we really get that message kind of supported. Let's look at Boeing right now. It formed a wave 1 and an ABC correction wave 2. I think this is another wave 1 and another wave 2. We got a pretty nice reversal, a nice pop on some news from the airlines. I think this is looking good. I think the airline ETF Jets holds above 18 to 20. I think Boeing keeps holding above 191, and that this is a wave 3 of wave 3 in progress. So this is wave 1 and wave 2. This is another wave 1 and another wave 2. There's only one debate right now, and I think most people would agree with this. Have large institutions been accumulating or distributing Boeing for the past year? That's the only debate that's really going on. And I think it's pretty clear this is a big old accumulation pattern for the stock that makes all of the airplanes. I know that sounds silly, but when a stock has a really kind of quote unquote obvious fundamental picture like Apple or Pfizer or Tesla, right? And I'm not saying Tesla has an obvious fundamental picture, but it's a really exciting fundamental picture, right? Kind of like Bitcoin. It's one where I think people are going to end up chasing Boeing, to be quite honest. I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2 that ended at 191. Wave 3 will take Boeing to 307 before a shallow wave 4 and a wave 5 higher. These 1, 2, 3, 4, 5 waves will end a large degree wave 3 in the 360s before a shallow wave 4 and a wave 5 higher. Boeing looks great. I think it holds above 191. I think it makes it worth the wait. Here is Carnival Cruise Lines. CCL, I'll present the most aggressive view. I really think this is the most accurate view, but this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. I think CCL holds 19, goes to 43 for the wave 3, has a shallow wave 4 and a wave 5 higher. That'd be 1, 2, 3, 4, 5 waves that would end a large red wave 3. So this looks pretty good. I think this is a 1, 2, 1, 2 Elliott wave nest. We hold above 19. And we go on a big old wave 3 to 43 before a shallow wave 4 and a wave 5 higher. I really want to kind of point out the more conservative count. I actually kind of think it's a little silly to say this, but it just kind of shows that even in the more conservative view, we're at least expecting another high for CCL. That means we're probably expecting another high for, a lot of reopening stocks. So this is a wave 1 and a wave 2. Conservatively, this is a wave 3 and a wave 4 of a leading diagonal. A leading diagonal is when you have a big wave 1 that takes the form of a rising wedge, then you have a kind of a kick out wave 2 before you explode. So the most conservative view is that this is a 1, 2, 3, 4 of a leading diagonal. Wave 5 will take CCL to this upper trend line. That will end a red wave 1. We'll look to buy a red wave 2 to ride waves 3, 4, and 5 to the upside. That's honestly kind of a silly thing to say, especially when you look at Boeing, especially when you look at possibly, a lot of these airline stocks, a lot of reopening stocks, this could be another nest right here. And we hold above 19 and we're going to fly past this trend line. We're going to go to 43, have a shallow wave 4 and a wave 5 higher. So it looks pretty damn good. I think CCL, I think Boeing, I think a lot of these reopening stocks, they've had super cheap, options, very low implied volatility. Carnival Cruise Lines made a lot of appearances on the bar chart straddle and strangle screener. We know that a big move is coming. I think it's pretty clear that move is going to be to the upside. If we hold above 19, it's a pretty safe claim to make. It's all risk reward. Here's healthcare. I love XLV. Man, this looks good. I was going to post about XLV on Thursday after the close, and then we had a huge run up on the that headline that we got. But I think this is a wave 1 and a wave 2. This is a big old wave 3 that passed the 161.8% extension of wave 1. We had a shallow wave 4 that ended between the 23.6 and the 38.2% retracement. I think we hold above 124 and go on a wave 5 higher. 123 is a little wide, but basically the same number. I think wave 4 ended. We're in a wave 5 higher right now. This could be a lot more useful potentially than looking at SPY, but right now, I think this looks really good for XLV. Wave 1, Wave 2, Wave 3, Wave 4. Wave 5 will be the length of Wave 1. Placed at the Wave 4 low, that will take XLV to 158. And that looks pretty conservative. If Wave 4 is in, it's going to be that big old round number of 160. So, hey, look for Wave 5 to end at 160. That's kind of easy to remember, especially if we hold above 123 to 124. That looks good. I like XLV. Here's Pfizer. Let's just stick with the short-term count of Pfizer in this video. I want to kind of point out, maybe I should do this on the daily chart, but when you take the Andrews pitchfork, and this is going to apply to Tesla next, you connect the beginning of Wave 1 with the high of Wave 1 and the low of Wave 2. Okay, so I'm going to have to do this on the weekly chart or on the daily chart, or I'm just going to have to make sure this is right. But all I'm trying to show is kind of how these pitchforks can be really useful to combine with your Elliott waves. So you see a Wave 1 and Wave 2. You connect the beginning of Wave 1 with the high of Wave 1 and the low of Wave 2. So Pfizer had an explosive Wave 3, or it was another Wave 1 and a Wave 2. We don't really know for sure yet. So I'm going to give the most conservative view right now. We'll talk about the more aggressive view. But what I'm kind of trying to point out right now is that this is how we can use Andrews pitchforks in our analysis. This was a Wave 1 and a Wave 2. It ended at the 61.8% retracement. So by taking the beginning of Wave 1 and connecting with the high of Wave 1 and the low of Wave 2, Wave 3 went and it kind of kissed the upper bound of the pitchfork. We had a Wave 4 go to the lower bound, and now we're within a Wave 5 higher. That's kind of the magic of the pitchfork. But if we look at just the wave theory, it's a Wave 1 and a Wave 2, a Wave 3. Conservatively, this is a Wave 4 that retested the Wave 1 high. Wave 5 will either be the length of Wave 1 or the length of Wave 3, placed at the Wave 4 low, and it gives Pfizer a target zone of 56 to 59. Now, what if Pfizer goes into the 60s from here? If Pfizer goes into the 60s from here, then this is probably a 1-2-1-2 Elliott wave nest. And it's going to be wild because we're not really used to seeing dividend-paying stocks, really fly. But that could certainly be the case, that this is a 1-2-1-2 Elliott wave nest. At the very minimum, we're still looking for 59. But in that case, that'd be the minimum Wave 3 target. We have a shallow Wave 4 and a Wave 5 higher. So I think Pfizer holds above 40, and it goes into the 56 to 59 range, possibly into the 60s. And I think it's a lot of evidence that XLV is going to be a really great ETF. So that looks good. Here's AT&T. AT&T is going to be the only kind of long-term chart we look at, and it's really an interesting picture. A huge Wave 1 and an ABC Wave 2 that ended between the 61.8 and the 78.6% retracement. So the widest kind of most important validation is this low from 2003 of 18.85. So what we've kind of been seeing a little bit of a theme of is, 20 years of institutional accumulation likely for AT&T, in my opinion. I really think this is 20 years of institutional accumulation, just like Pfizer, just like Merck. We're going to start heading to that 2000 high. I'm not correlating Pfizer, Merck, and AT&T. I'm just saying there's a theme of value stocks that have been in a 20-year base. I think AT&T is one of them. This is a huge Wave 1 and an ABC Wave 2. I want to see that dividend is still kind of healthy. I want to see what some of those payouts look like, but I think this is a big Wave 3 in progress if we're above 18, and that could be just absolutely explosive for AT&T, especially if it's paying a dividend on the smaller degree. This is probably another Wave 1 and another Wave 2. So the invalidation levels are about 18 to 20. The tighter stop would be this Wave 2 low, about 20.19. We could be within Wave 3 of Wave 3. It could be an interesting opportunity. I want to see AT&T form a 1, 2, 3, 4, 5 waves impulse kind of on the smaller degree. But I think that this is one of those where, everyone's kind of really bearish on this sector. And then, we've seen what happens to these before. Just look at Pfizer. Just look at, what could be happening to the airlines right now of a 20-year base breakout potentially. Here is Tesla. Here's Tesla. What I want to show with Tesla right now is what we just looked at on Qualcomm, this really powerful Ichimoku cloud bounce. So, one thing I'm kind of trying to show is that we can use objective indicators like implied volatility in the Ichimoku cloud to kind of complement our wave theory. Maybe I'll make a more specific video, how to do that. But notice how this successful cloud bounce on the weekly chart ended in a huge rally to the upside for Tesla. So it's not just like there's, wave theory and the stars and, whatever that we're looking at. This is a very objective view that we are in an uptrend, right? This is a mathematical, kind of explanation that Tesla is in an uptrend. We got a very successful Ichimoku cloud breakout or Ichimoku cloud bounce, and it looks like this is a very big uptrend that began. So I'm only saying that for Qualcomm and Tesla because it looks very similar to Roku right now, that we could be in an extremely big Ichimoku Cloud breakout or an Ichimoku Cloud bounce on the weekly chart. Here's Tesla right now. It formed a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. We're going to have a huge wave 3 in progress right now that takes Tesla to 1368. Past 1368, we have a shallow wave 4 and a wave 5 higher. So, for Tesla, there's a couple of ways to look at it. The first thing is that most conservatively, and this is honestly starting to seem silly, this is a wave 3 that ended. This is wave 4, and Tesla's within a wave 5 higher right now that will stop at 1368 and go down. That's starting to look a little silly, especially when we look at the short-term view. But the most conservative view is that this is a wave 1 and a wave 2. This is a wave 3 and a wave 4. Wave 5 will be the length of wave 3, placed at the wave 4 low. Tesla goes to 1368. Here's the thing, that's starting to look a little too conservative. And when we zoom into the shorter degree picture, we'll see why. So I came out on the day that Tesla formed this low of 546, and I said, I still think this is a wave 1 and a wave 2, and we're not going to go below 539. I think Roku's doing something very similar. It's flirting with that low, but I think that it's not going to be broken. Even if it is, I think there's going to be a big move to the upside. But let's look at Tesla right now. On the kind of daily chart, it's very similar to Pfizer, where if you connect the beginning of wave 1 with the high of wave 1 and the low of wave 2, we have good news and we have bad news. The bad news is Tesla's at the upper bound of the pitchfork. Does that guarantee that Tesla's going to go down? No, but it's pretty hard in my experience, especially on the daily chart, that a wave 3 just breaks through the upper bound of the pitchfork in one move. Usually the wave 3 target is the median of the Andrews pitchfork. So when a wave 3 goes all the way to the upper bound of the pitchfork, just kind of mentally, you have to be prepared for that sideways wave 4. That's the bad news. Here's the good news. This is the good news about Tesla. Even in the most bearish view, I think for a lot of these, we're just going to start saying what is the most bearish possibility. I think in the most bearish view of Tesla, this is a wave 1 and a wave 2. This is a huge wave 3. The worst thing we could expect is a shallow wave 4, a sideways wave 4, where everyone calls the top and mostly acts as a bear trap and a retail shakeout before another leg to the upside. So that's the bad news. The good news is that would end a wave 4 on the smaller degree. We'd be looking for a wave 5. I don't think wave 5 would be the length of wave 1 placed at the wave 4 low. If wave 4 ended at the lower bound of the pitchfork, that doesn't really seem what a wave 5 would look like. I think wave 5 is going to be the length of wave 3 placed at the wave 4 low. When we look at the solar ETF, when we look at First Solar, In-Phase Energy, all of those stocks that we've really just kind of slaughtered in the clean energy sector, they have a lot more upside. Tesla's not going to be left out of that party. So the worst thing that I could see for Tesla right now is that this is a wave 1 and a wave 2. We hit the upper bound of the pitchfork, so we'll have a shallow sideways wave 4 before a wave 5 higher. That's the bad news. The good news is that would complete a wave 4. We go on a wave 5 higher, and I think that wave 5 will be the length of this wave 3, placed at wherever wave 4 ends. That could take Tesla way past 1368. And that's the good news. Because if Tesla goes past 1368 at all, if it goes to, say, 1375, 1380, especially 1400, then we're going to know kind of what we just kind of started talking about, that Tesla is not within a wave 5. It's within a wave 3 of a wave 3. Yeah, we might have a sideways wave 4 in the short term, but don't bury the lead. That wave 4 would be followed by a wave 5 higher, and all in all, I think it would look something like this. This is wave 1 and wave 2. Wave 3 is going to go past 1368. We have a shallow wave 4, and we go on a wave 5 higher. Wave 5 will be the length of wave 1, placed at the wave 4 low on the larger degree, and we could be talking about this whole rally getting replicated again and having Tesla go to a potential Cathie Wood price target. So just to recap, in the biggest picture of Tesla, what is the most likely count, in my opinion, is that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So a wave 3 of wave 3 is in progress right now. We are going to know that's the case if Tesla goes to the 1370s, the 1380s. Really, if Tesla goes past 1368, we're going to know it's not within wave 5, it's within a wave 3. So that is the short term. That's the bigger picture view of Tesla. The short term view of Tesla shows that really the worst thing bulls could expect is that this is a wave 1 and a wave 2. We ended wave 3, or we're getting close to ending wave 3 at the upper bound of this pitchfork. We're going to, in the most conservative view, expect a shallow wave 4 that most likely goes sideways, hits the lower bound of the pitchfork, wave 4 ends, and Tesla goes on a wave 5 higher. Waves 1, 2, 3, sideways wave 4, wave 5 higher gives a lot of evidence that Tesla will go past 1368. That means it gives a lot of evidence Tesla's not within wave 5 on the larger degree. It's within wave 3 of wave 3. It'll go past 1368, have a shallow wave 4 correction, and go on a wave 5 higher to likely a Cathie Wood price target in 2022. Here is NIO. I think NIO is a really nice opportunity, given everything we just talked about with Tesla. On the short term, I think this is a wave 1 and an ABC correction that ended a wave 2. We have a lot of Chinese EV names that look really good. The solar ETFs look really good. The ARK ETFs look really good. I think NIO is going to get some money. This is wave 1 and wave 2. It's going to be a big old wave 3 in progress right now. If it holds above 33, especially if it holds above 30, but I think 33 is kind of the more realistic stop. We're going to go up to 70, pretty shortly, have a shallow wave 4 and a wave 5 higher. So I think that NIO is going to 70. That means it's going above this wave 1 high. That means it's going to prove that this is all institutional accumulation. So I think NIO looks really good. I think it really reminds me of Apple. It reminds me of the healthcare sector that, we could see some of those names be, the outperformers in the future. So NIO looks pretty good. I think it holds above 33, goes to the 161.8% extension of wave 1 of 70 before a shallow wave 4 and a wave 5 higher. Wave 5 will be the length of wave 1, placed at the wave 4 low. That could take NIO to 85, possibly 90, in the first half of 2022, probably even the first quarter. Here is Li Auto. Li Auto is a nice opportunity because if we looked at the XPEV chart, it's almost identical, except that XPEV is already above this wave 1 high. So on the full count of Li Auto, it's important to note this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2 that ended at the 50% retracement. XPEV is already above this wave 1 high. I think Li Auto, we kind of have a lot of evidence, will hold above this wave 2 low of 25 and explode into wave 3 of wave 3. So the wave 3 target is 49. We'll have a shallow wave 4 correction and a wave 5 higher. But what's most important is that if Li Auto goes to 49, it will confirm from an Elliott wave perspective that this is an IPO base and that this is one where, the IPO recency has a lot of correlation with the risk reward. If this really is an IPO base, then personally, this is not going to be one to let go of when we break above this high. In my opinion, when Li Auto and XPEV are above their November 2020 highs, they will confirm they've broken out of IPO bases, and those two could be very similar to Square Cash and eCash in 2017 or 2018, where the IPO base breakout leads to a sustained, possibly multi-year rally. So I like Li Auto a lot as a kind of catch-up play if it holds above 25. Here's the solar ETF TAN. We'll start with the biggest picture. It's going to look a little, it doesn't look messy if I hide it, but this is a wave 1 and a wave 2, a huge wave 3, and an ABC correction that ended a wave 4. Conservatively, and this is really important to think about with all the stocks we just talked about like Tesla and NIO, it looks like the solar ETF TAN has a lot more upside. Remember, recently we saw First Solar, break out above the first quarter high. We saw Enphase Energy break out above the first quarter high. The solar ETF TAN has yet to do so, and I think it will. I think this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 that has ended. Wave 5 is going to be likely the length of wave 3 placed at the wave 4 low. And in the bigger picture, the solar ETF TAN has more upside to 172. So that's very good for First Solar. It's very good for Enphase Energy. It's very good for clean energy and growth in general because it kind of sends that message that this is, 6, 7, 8 months of institutional accumulation. Everyone's fallen asleep on this sector and it's ready to go. On the short term count, it's a wave 1 and an ABC wave 2. It looks very similar to the ARK ETF except it's already broken above this wave 1 high. I think that the solar ETF is a leading indicator right now for a lot of growth stocks. This is a wave 1 and a wave 2. We're within a wave 3 right now to 109. We'll have a shallow wave 4 and a wave 5 higher. Wave 5 will be at least the length of wave 1 placed at the wave 4 low. And that's going to take First Solar to a new high above 125. That's going to confirm from an Elliott wave perspective that we have been accumulating solar stocks and clean energy for a very long time. And we kind of already know that because First Solar has exploded above this high. So has Enphase Energy. So has Tesla. So looking very good for TAN. Here's ROKU. So one thing I want to show with ROKU is that this is kind of an objective place right now on the weekly chart, right? I'm not a cloud bro, but This is an objective place right now on the weekly chart where if Roku successfully kind of reverses and recovers here, this could be very explosive. Now, we're going to cover ARK and ARKW in a second and show how those ETFs that hold a lot of Roku look very good. But let's just talk about the kind of primary expectation. Right now, Roku feels very similar to when I came out on the day that Tesla hit 546. We were close to this low, sentiment was doomsday. We might, and I think we will, reverse before we break 272. In that case, this is wave 1 and wave 2. We're then an explosive wave 3 that's going to take Roku to the 161.8% extension of this wave 1. And the 161.8% extension of this wave 1 is going to go off the chart. That's going to take Roku into the 600s, right? So a lot of people think Roku going to 700 is crazy, but the 161.8% extension of this wave 1 is the textbook wave 3 target. We'd have a shallow wave 4 and a wave 5 higher. Roku could go off the charts in the short term. So if we don't break below 272, I think this is a wave 1 and a wave 2. We're going to explode into waves 3, 4, and 5, wave 5 to the upside. Wave 5 will be the length of wave 3, placed at the wave 4 low. It's that classic bull flag breakout and back test, and Roku should go to 707. Now, it's going to be hard for a lot of people to kind of do this, but I think the ARK ETF and the ARKW ETF that hold a lot of Roku could be just as important as the Roku chart itself, especially in the event that we break below 272. Now, I don't think Roku breaks below 272, but it's kind of silly to not talk about it, okay? Because we're, $4, $5, $6 away. So what could this be for Roku? I think what this could be for Roku if we broke below 272, what this could be is that this is a 1, 2, 3, 4, 5 waves impulse that ended a large wave 1. So this is what I would have if we did break below 272. One thing I kind of had been mentioning for a while is that the fact that Roku was ending a correction right at the 50% retracement kind of made it purposefully ambiguous as to whether or not this was a wave 5 in progress or a big old wave 3. So if Roku does go below 272, it invalidates the short-term view. But in the bigger picture, I'd be looking for a wave 2 to end at the 61.8% retracement. I think this would be a crazy buying opportunity because this would all be a 1, 2, 3, 4, 5 waves impulse that ended a large wave 1. We look for a wave 2 that ended at the 61.8% retracement before an explosive move to the upside in the bigger picture. I don't think it happens, but if it did, it wouldn't be the end of the world for Roku in the long term. It would, however, invalidate the short-term projection. And when we look at the ARK chart in a little bit and the ARKW, we're going to see right now that they might be more useful than Roku itself. They hold a lot of Roku. Roku is the second biggest holding of ARK, and Tesla, the first biggest holding, has exploded above the first quarter high. Okay. And I think right now the ARK ETF is going to follow Tesla. This is a wave 1 and an ABC wave 2. So when we look at ARKW in a second, which holds 4% Roku, we'll see that it is already above this wave 1 high relatively that is 132 for ARK. I think right now, this is wave 1. This is an ABC wave 2. The length of wave A placed with wave B high is where wave C ended. It's almost identical to the solar ETF TAN. It's almost identical to the ARKW chart, which we're about to look at, except they've already broken this wave 1 high. I think that ARK will hold above 106, go to 154 before a shallow wave 4 and a wave 5 higher. I think that happens in Q1. I think it almost, I don't want to say definitely, but I think it definitely happens in Q2. But I think this is a wave 1 and a wave 2. And the kind of textbook wave 3 target is 154 before a shallow wave 4 and a wave 5 higher. So I think right now, almost more important is ARK holding above 106, going to 154 before a shallow wave 4 and a wave 5 higher is a lot of evidence that Roku and Square Cash will be going with it, and that we're going to see a lot of Cathie Wood stocks follow Tesla, which is the largest ARK holding. So wave 1, ABC wave 2, ended at the 61.8% retracement. We're then a wave 3 higher right now to 154 before a shallow wave 4 and a wave 5 higher. That's ARK. Here's ARKW. I want to talk about ARKW because it's almost identical to what we just saw, except we've already broken above this wave 1 high. So I think ARKW is just like ARK. It completed an ABC correction, formed a wave 1 and an ABC that ended wave 2 at the 50% retracement. But unlike ARK, it's already broken above the wave 1 high. I believe this is acting as a leading indicator right now. Remember, this holds 4% Roku. So this is a wave 1 and a wave 2. I think we go up to 178 for wave 3 before a shallow wave 4 and a wave 5 higher. In the same way that ARK is going to, the 150s before a shallow wave 4 and a wave 5 higher to 175, 180. I think ARKW is kind of already confirmed. It's within a wave 3 to 178 before a shallow wave 4 and a wave 5 higher. So, the whole point is the ARK and ARKW, they hold a lot of ROKU. If they're rallying, statistically, I think that ROKU is going to rally with it. Here's Palantir. Palantir formed a 1, 2, 3, 4, 5 waves impulse and had a large wave 1. We had an ABC correction in a large wave 2. We've seen a couple of these software stocks get hit by earnings. I think a lot of them are selling climaxes. I'm getting a little nervous about Palantir earnings, but I think that's almost a good thing. I think this is a wave 1 and a wave 2. I think this is a big wave 3 in progress. It's going to take Palantir above this, all-time high. And then that is going to be an IPO base that we just talked about for XPEV. We just talked about for Li Auto. We talked about the IPO chart itself, which holds a lot of Palantir, in my other videos. But this is a wave 1 and a wave 2 on the smaller degree. So the stop level is 20.55. The long-term invalidation level is about 17. So I think this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. I think we hold above 20.55. I honestly think we hold above about 23, and we're going to go to the median of the pitchfork. Well, the median of the pitchfork will complete this blue wave 3, and that's going to take Palantir, up to 40. We have a shallow wave 4 correction. We go on a wave 5 higher. All in all, just within this cycle from the low of 17.05, that's a wave 1 and a wave 2, wave 3, wave 4, and wave 5 will take Palantir above the wave 1 high. Then that would be, just like XPEV could be, confirmation that this is a big old IPO base and that this is going to be one where if Palantir is above, 45, hypothetical bulls who bought down here aren't going to want to sell it for a very long time. So that's Palantir. Here's Square. We're seeing some of these fintech stocks, some of Kathy's stocks get slapped after hours for earnings. I think a lot of them are selling climaxes, to be honest. This is an ABC correction. This is a wave 1 and a wave 2. I think for Square, this is a 1, 2, 3, 4, 5, another wave 1 and an ABC correction that ended wave 2 at the 61.8% retracement. I think right now we're going to hold above 222 and go on a wave 3 higher. Wave 3 will be the length of wave 1, placed at the wave 2. Square Cash and PayPal, they're going to rally together with the ARKF ETF. This is going to take Square Cash to 319, the length of wave 1, placed at the wave 2 low, says 319 is the minimum wave 3 target. We'll have a shallow wave 4 that will conservatively retest the wave 1 high before a wave 5 that is at least the length of wave 1, placed at the wave 4 low. That will take Square to about 385. Here is Amazon. Let's talk about some of these e-commerce stocks. Amazon looks damn good. This is almost as good as Qualcomm. We broke this wave 1 high on the smaller degree, but this is a 1, 2, 3, 4, 5 big old wave 1, ABC correction, huge wave 2. I think this is another wave 1 and another wave 2. I think this is another wave 1 and another wave 2, and that's easy for me to say now because we've broken the wave 1 high. So I think we're within wave 3 of wave 3 of wave 3. Conservatively, Amazon's going to 3,781 before a shallow wave 4 and a wave 5 higher. I think that we're going to see fireworks from Amazon in November and December. I think honestly, by the end of the year, we see 4,000, and that's pretty conservative on the bigger degree. This is a wave 1 and a wave 2. This is another wave 1 and another wave 2. So the wave 3 minimum target, is that's almost a silly wave 3 target. But what's important is it would be followed by a shallow wave 4 correction in a wave 5 higher. So what I think is going to happen is that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. This wave 3 is a 1, 2, 3, 4, 5 waves impulse that will take Amazon to 4,000. That will end a black wave 3. We'll have a shallow wave 4 that retests the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That should take Amazon to 4,400. Possibly in the first quarter of 2022. It's looking pretty damn good. I think bulls should be emboldened right now. Especially we have the ONLN ETF looking really good. I think we have the Alibaba. A lot of these e-commerce stocks look really good. I think e-commerce is one of those that are going to be nice. Let's, just so you can see these fibs. Wave 1, wave 2. Wave 3 goes to 3,781. Wave 4 ends at the 23.6% retracement. We go on a wave 5 higher to 4,000. That will end this black wave 3. We'll have a shallow wave 4 that retests the wave 1 high. Wave 5 will be the length of wave 1 placed at the wave 4 low. If wave 4 retests the wave 1 high, waves 1, 2, 3, 4, and 5 should take Amazon to 4,400, possibly in the first quarter. I think Amazon sees 4,000 by Christmas. So it's looking pretty damn good. Here's Fiverr. Fiverr is another one of these e-commerce stocks. I think a lot of the e-commerce stocks are, going to get some alpha. This is a 1, 2, 3, 4, 5 huge wave 1 for Fiverr and an ABC correction that ended wave 2. between the 50 and 61.8% retracement, I want to see Fiverr hold above 138. And if it does, the length of wave one, place of the wave too low, says that a lot of these e-commerce stocks could be really nice opportunities if we're above 138. Fiverr is a growth stock. I think a lot of people, they hear these big numbers like Roku going to 700, Tesla going to 1368, Zoom going to 1100, and they forget that stock splits exist. So stock splits do exist. I think this is a wave one and a wave two. The length of wave one, place of the wave too low, should take Fiverr to 469. Now, I probably shouldn't talk about after that, but that would be the minimum wave three target. We'll have a shallow wave four that retests the wave one high, and then a wave five that is the length of wave one, place of the wave four low. That could take Fiverr to 650. So right now, it's all risk reward. If we're above 138, that's the stop. It looks like there's a lot of upside. I think Fiverr kind of turns around, and this is a big old base. Everyone's falling asleep on this giant, and that's a good thing if you're a bull. So Fiverr looks pretty damn good. A lot of these e-commerce stocks look really good. Here's Alibaba. I'm honestly going to buy Alibaba Monday morning with a stop below this low. I'll say it, but this is a wave one and a wave two. This is another wave one and another wave two. It's all risk reward. Alibaba can go below this low. It can break below 129. It can break below 130 for sure. That's certainly a possibility. And that is, a 15% loss. Or it won't. Okay. So let's talk about if it doesn't. This is a wave one and a wave two. This is another wave one and an ABC correction ending another wave two. If we hold above the large degree wave two low of 129, and in the short term, if we hold above 138, then there is exorbitant upside for Alibaba. Minimally, we're going to see a wave three that is at least the length of wave one, place of the wave too low. That's a silly wave three target. But what's more important is that at the very minimum, we're expecting that we're going to see at least 328, and that's going to be a new high for Alibaba. That's going to confirm that this is a fat base. This is a huge base, and this has got, get everyone out. I think the big boys have been accumulating it this entire time. Yes, even while it was going down. I know that sounds crazy, but I think that the length of wave one, place of the wave too low, gives a minimum wave three target of a new all-time high for Alibaba. More importantly, we'll have a shallow wave four that retests the wave one high before a wave five that is at least the length of wave one, place of the wave four low. All in all, waves 1, 2, 3, 4, and 5, just within the kind of shorter term cycle from the October 2018 low, would end a 1, 2, 3, 4, 5 waves impulse. That would take Alibaba to 500. So I like Alibaba a lot. I think above 129, it's one of those where sometimes it's not about the trades you make, it's about the trades you don't make, to be honest. And I think Alibaba might be one of those where I personally am going to regret not buying it. That's a wave one and a wave two. This is a wave 1, 2, 3, 4, 5 that ends another wave one and another wave two for OKTA. People have fallen asleep on OKTA, but the cybersecurity ETF hack has 0% implied volatility. It's already broken above a lot of these highs. I think OKTA is going to be very explosive. I think this is a wave one and a wave two. This is a 1, 2, 3, 4, 5, another wave one, and an ABC that ended another wave two for OKTA. So the length of wave one, place of the wave too low, will take OKTA to about 308, and that is honestly stupidly conservative. But what's important is that would be a wave three that breaks the wave one high. Then we'd have a shallow wave four that retests the wave one high before a wave five that is at least the length of wave one, place of the wave four low. All in all, waves 1, 2, 3, 4, and 5 should take OKTA in 2022. Probably Q1. Almost certainly Q2. I think that we hold above these wave two lows of 209, and we explode into wave three of wave three. This red 1, red 2, red 3, red 4, and red 5 will end a black wave 3 at 400. We'll have a shallow wave 4 and a wave 5 higher. I love OKTA. If it's above, about 209, I think it's got a very nice upside. The biggest invalidation level is 199 TWLO. OKTA, Fastly, I think we're seeing this theme, with Zoom, that some of these laggard software stocks could be monsters in 2022, possibly even just to end the year. Here's MicroStrategy. Here is Riot Blockchain. We'll be saying it. Michael Saylor was right, at least about Bitcoin. If he has any other opinions that are controversial, not those, but his opinion that Bitcoin at 30K was a very nice buy, he was right about that. So Michael Saylor was right. I'll say it first. This is a wave one and a wave two. This is a huge wave three in progress. And I think this is a nest that we formed from this low of 411. This is a huge wave three in progress that will take, it'll make Michael Saylor probably the richest man in the world. He's going to go from this low of 411 all the way to 1647. 1647 is that wave 3 target. We have a shallow wave 4 that retests the wave 5 high. Sorry, we have a shallow wave 4 that retests the wave 1 high. Then waves 1, 2, 3, 4, and 5 will take MicroStrategy potentially, to 2,540. That sounds crazy. I think there's definitely going to be a stock split, but what's more important right now, I think MicroStrategy, I think Riot Blockchain with Marathon Patent Group above all these highs, really have a lot of evidence that the laggard crypto miners, the laggard kind of crypto sector is going to be very profitable. I think this is all a wave 1 and a wave 2. I think this is a big wave 3 in progress. So this whole rally was from 316 to 208. It's another one of those that I think it's going to take some time, but I think, 6 to 10 months from now, the length of wave 1 placed the wave 2 low takes MicroStrategy to about 1653. That's going to be a wave 3 target. We have a shallow wave 4 and a wave 5 higher. I think that honestly the best view of MicroStrategy is that if we hold above 472, there's a lot of evidence it's going to 1600, and that's really bullish for crypto as a whole. I'll talk about Riot Blockchain right now. It's kind of lagged Marathon Patent Group. Someone actually told me the fundamental explanation, so thank you for that. There is apparently a fundamental reason that Riot Blockchain lagged Marathon Patent Group. I don't really think it's going to affect it. I think this is a huge wave 1 for Riot Blockchain. This is an ABC correction that ended a wave 2. Now, this whole rally is from September of 2020 to February of 2021. Now, on the one hand, that's pretty bullish seasonality. Also, we make a new high on the relative strength index, so that kind of helps confirm this isn't a big wave 5 that ended. I think this is a huge wave 1 for Riot Blockchain and an ABC correction that ended a big wave 2. The length of wave 1 placed at the wave 2 low, just like Marathon Patent Group going to 75.80 sounds crazy. I think 98 for Riot Blockchain is a conservative target. It should get very explosive for this stock. From this low, I think this is another wave 1 and another wave 2. So we're going to see Riot Blockchain explode into wave 3 of wave 3. There's pretty impressive upside for Riot Blockchain above this low of 23 and certainly above this low of 20. So Riot Blockchain, above 20 to 23, there's no guarantee the lows don't get broken. But if they don't, then we're going to go all the way to the lower bound of the pitchfork and then to the median of the pitchfork. All in all, the length of wave 1 placed at the wave 2 low gives a conservative target for Riot Blockchain of 98. It's unlikely that Bitcoin and Ethereum or any of the cryptocurrencies are crashing during that time.